It is a high-stakes gamble that we're actually required by law to take part in. We bet an insurance company that something bad is going to happen to us, and then they pay us out if we're right. And because a lot of bad things have happened in the past few years, largely weather-related, insurance companies have paid out a lot more than they have wanted to pay out, which means that we, you know, you and me and all us Americans trying to just get by, we are all paying a lot more in premiums. Some gamble. A research analyst with LendingTree put it this way, and I will quote them. We have seen a 163% increase in the last 20 years in the number of natural disasters, and a lot of those have been floods. So even if you don't believe in climate change, that doesn't matter because your insurance company does. Joining me now is Lynne McChristian. She's the director of the Office of Risk Management and Insurance Research at the University of Illinois, and Karen Collins, assistant vice president of American Property Casualty Insurance Association. That's a mouthful. All right, ladies, thank you so much for being here. Let me start with you, Lynne, if I can. Nobody likes to hear about premiums going up, but in the same way that if you were a smoker, your health insurance premiums would go up because you now represent a bigger health risk. So shouldn't those same principles apply to people who decide to live on cliffs or live on beaches that are eroding or live in floodplains and all the rest?
It does. It does apply. So what you pay for insurance, if you're using your analogy of a smoker, what a smoker would pay is going to be more because the risk is higher. Same thing with property insurance. What you pay for insurance is sending you a signal about what your risk level is. And you're right, nobody likes to pay for insurance, but you've got to pay attention to that signal. It's telling you not to be a victim, to do something to protect your property, to make it less vulnerable.
But see, these were the rules. These always seem to be the rules. That doesn't seem weird. But all of a sudden, the same communities are getting pummeled and then rebuilding and getting pummeled and rebuilding. And at some point, the insurance companies are starting to feel like a super fatigue. So, Karen, what is the answer? Is it right? Is it fair? Is it just the new reality to say, we just can't insure you anymore? This place is way too dangerous.
Yeah, to your point on the flood changes, earlier this year, FEMA did roll out a major overhaul of the National Flood Insurance Program known as Risk Rating 2.0. Those changes are now being reflected in policy renewals. So certainly, reach out to your insurance provider agent to discuss how they might be impacting you individually. But regarding the changes, the new program really is meant to make the cost of flood insurance more equitable and reflective of the actual cost and risk. And that's done by incorporating more factors for an individual property's flood risk. And this might be property's likelihood to flood, including also considering for the first time ever an individual property's characteristics such as the elevation and cost to rebuild. Previously, when considering the cost to reconstruct a home after a flood event, generally those with higher valued homes you'd think should be paying more in insurance than those with smaller homes, but that's just not been the case. And so the change that the flood program is rolling out is intended to correct that so that those with lower valued homes are no longer paying more than what they should be for their share of that risk. There are some statutory limits on rate increases, fortunately, that are going to limit those increases to no more than 18% increase per year. But the
that's interesting because I was going to ask you if there's a grandfather clause. Like a lot of these, listen, I feel bad. I mean, I'm an insurance, premium payer, and I don't make a lot of claims, and yet I keep paying and paying and paying as the pool, when everybody else is getting hammered by the ocean. So should they have been grandfathered in, do you think, Lynne? Would it have been fair to say to the people who just all of a sudden got walloped with $100 extra on their bill because Shazam, FEMA said the maps have changed. Shouldn't they have been grandfathered in to be a little more gradual?
They are doing that to some degree, but what it comes down to now is risk-based pricing. What's fair, what's equitable. Just because you've been in a property for a long time doesn't necessarily make it fair that you pay a lot less than someone who's a new homeowner. So again, is what that risk level is what you're paying in insurance. And the other thing to remember is that insurance is the cost of claims. So as the cost of claims increases with this, extreme weather events that we're getting right now, the cost of insurance has to do that, has to match what the cost of claims are. And I do want to make one point is insurance companies aren't dropping policies. Okay, so what they're doing is non-renewing. So they'll be honoring those policies for that 1-year contract, but they're telling some of the policyholders that we can't take it on again. The risk is too great. We're not able to charge a sufficient amount.
But that feels like dropping. I get it, But here's the question: as I look at all these pictures, and they make me so sad to think of all of these people who've lost so much. Karen, are we going to get to a point where that's going to be more the norm? You're going to struggle to find insurance because these days they just can't afford to pay out claim after claim after claim because of these weather incidents.
The insurance industry has unfortunately undergone difficult market cycles in the past. I can point to, the challenges that we're seeing in the Florida market right now. Back in '92, after Hurricane Andrew, we saw a number of insurers become insolvent, followed by a very severe period of contraction with numerous measures that were implemented to help stabilize that marketplace. And we saw it kind of similarly occur again in the 2004-2005 hurricane season, which had 7 landfalling hurricanes. So when you fast forward to today, in the last 2 years, 2020 and 2021, insurers have paid out $176 billion in natural catastrophe claims, which is the highest total for a 2-year period for natural disasters. When you factored inflation, the supply chain issues, demand for skilled labor and construction materials, this has all significantly increased the cost to rebuild homes and business, which is truly affecting insurance across the country.
So I'm going to just list out the top 10 costliest hurricane disasters for insurers. They've all happened in the last 5 years. It's amazing to say that, but here they are. And once I say the names of these hurricanes, you'll get it. Ida, Harvey, Irma, Maria, and Hurricane Michael. All of those are, really scary storms that we saw. I mean, look at those billions. Look at that column. It's just insane. So, Lynn, are the insurance companies also playing catch up because they've been taking it on the chin for so long and they're trying to, make up for some lost dollars?
They can't play catch up. That is not allowed. So what insurance companies have to do is they're pricing the risk before they know the true cost. Okay, so what they're doing is they have to look at it in advance. They are prohibited from going back and recouping those losses. They have to plan it forward. So that's why they try to look at the catastrophe models. They look at history, and history is not a perfect guide because things are happening that have never happened before. And so they have to try to figure out how is that history affecting, what are the increased costs, the increased severity and frequency of these storms. How are we going to plan for that and price for that going forward for the next year? Yeah. They can't recoup those losses.
Okay, Karen and Lynn both. And Karen, I'm going to start with you. I want you to give our viewers who are watching right now your best advice for trying to navigate this very difficult insurance sort of landscape as it changes and as it becomes more difficult and more expensive. Karen, you start. What are the best tips and pieces of advice for people out there who need insurance?
The biggest concern is that we want to provide affordable coverage to consumers, especially in those areas that are at high risk for natural disaster. The biggest priority for our industry is really focusing on risk reduction. So hardening homes and communities to be more resilient to natural disasters. As more communities do that, it will result in a meaningful decrease in losses, which then translates to that more affordable and available coverage. And so we always are encouraging consumers, reach out to your insurance company, discuss the ways that you can, reduce the risk to your own home and business, which often can result in potentially a discount to your insurance policy. And then just make sure you're financially prepared.
I wouldn't even know where to start. I wouldn't even know where to start to harden my home. But okay, Lynn, what's your best tip? We got a minute left. Tell me what the best advice is out there.
Look at changing your deductibles. What can you do to take a higher deductible to lower your insurance costs? And again, what can you do to make yourself a lousy victim so that you stand up to Mother Nature and that you can live safely in the place you call home?
You guys are great. It's a really uncomfortable conversation because we really love insurance, right? But boy, do we hate it when we fight them and then we get these bills. I mean, it's a love-hate thing. And we also hate paying for other people, but you have to be in a pool. So Lynne McChristian and Karen Collins, thank you both. Really appreciate it. Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.